Good afternoon, everyone. Thank you for joining this new webinar. My name is Ben, as yes, I do. Very happy to welcome you all to this new webinar by the Mauritius Africa FinTech Hub. I think we can kick off now with that style. I welcome you and open up the floor to you. Kindly introduce yourself in a few words and guide us into the fundamentals and the applications of DeFi. Over to yourself.
Thank you very much. Thank you very much. Honor being here today. Yes, wanted to talk about decentralized finance and financial inclusion. A little bit about me, so you understand why I qualify to talk to you about something so complicated. We're here to simplify the genius. Currently, I serve as CBDO at a London-based company called Bridge, which we do everything AI and blockchain and how to empower emerging markets to be able to not get left behind in this new technology revolution. Some of the experiences I've had as COO at a company called Nettle was looking at decentralized payment solutions for stablecoins and digital assets. We secured investment from the Algorand blockchain and also Outlier Ventures, which is the largest Web3 investor. We achieved a valuation of 15 million within two years, and Nettle has gone on to evolve into a digital bank in Dubai. During that time, I was able to have the privilege of one of the first to decarbonize 1,000 bitcoins. And also, my heritage is actually Mauritian, so it's a big honor bringing this knowledge back home. And I've been part of the movement which led by Jessica Naga at Mindex, being involved to create a decentralized exchange in Mauritius itself, which looks at tokenizing real world assets in Africa. So love to be able to share with you what the potential Mauritius has. Now, to start with, the angle I'm going to bring, share with everyone is around for you to be able to understand this complex world of blockchain. So I wanted, if you don't mind, I'm going to bring you right to the beginning. Now, this is an example of what I've built before, and I've called it Dodo Pay. But Dodo Pay is a decentralized multi-chain e-commerce payment plugin accepting crypto and stable coins and reward tokenized points for green purchases. Merchants who use Dodo Pay are issued digital wallets and can off-ramp crypto into fiat. We can do so on their behalf when requested. Now, that can sound really daunting and complicated to the layperson or someone coming from FinTech into the blockchain space. So the challenge I'm going to set myself is that you will understand 100% what I've just said right at the end. To start with, I wanted to share with you a little story I had during my travels in China. I was very fortunate to travel the world and experience the technological nuances around the globe. I was commissioned by the Department of International Trade in the UK to set up a British franchise in China, where I was working in a northern province called Liaoning, and the capital being Shenyang. Now, people told me that Shenyang was actually 10 years behind Shanghai, 10 years behind because it's so far north. Now, I remember finishing work, going to a Starbucks in Shenyang and asking for my typical decaf flat white, and a 16-year-old barista presented, and there's me trying to pay. So I took my credit card out and said to her, "Oh, I'd like to pay for my coffee, but where do I pay?" And she looked at me and says, "Excuse me, we do not take credit card here." And I'm like, "Oh my God, this country's so, this city is so behind. They don't even have credit cards." And there's me being a bit blasé. "Oh, you don't even take MasterCard or Visa?" And she's like, I don't know what this is that you're showing me." And so she called her manager, and her manager came in, and the manager looked at it and said to her, "Oh, this is this is credit card. Your father used to use it," and explained to me that they'd phased out credit cards 10 years ago. It made me look like I was behind in the times. And she pointed to me and said vintage, and wanted to take a selfie with me holding my credit card. What that showed was that credit cards in China are kind of obsolete for the youth. They have this Uber app called WeChat Pay, and they use digital wallets for payments. So credit cards is on its way out. Now, this leads very well into me explaining the world we're living today. It's a kind of multi-parallel dimension happening all at once, where we have the battle between the centralized world and the decentralized world. And here are some examples. Example would be we've got cash, but the alternative world of cash is crypto and stablecoins. You have assets like art, and what we are able to do is turn art into digital assets. And I'll explain to you what that means also. Credit cards into digital wallets. How many of you actually pay just tapping your phone? It has a picture of a credit card, but it's not a credit card. And real world, turning into real world assets. Let me explain to you a bit more about that and how DeFi is defying gravity. More people are art collectors than ever before because of NFTs. What are NFTs? I'll go into that shortly. More people use digital wallets over credit cards. More people are investors than ever before because of crypto. And if we're stuck on what crypto is, I'll explain that shortly. More people can own real-world assets than ever before because of tokenization. I'll explain also what tokenization is in a moment. And more money can move faster and cheaper across the world for international aid, remittances, trade, than using money transfer companies or even banks because of stablecoins. Now, what is DeFi or decentralized finance? Simply put, it's a financial system that's run on this new technology called blockchain. It enables you and me to send money to each other without intermediaries. So money transfer organizations and banks. I can send money to you, you can send money to me without it going through banks. When we raised for one of our startups, I remember being on a Zoom call, and the investor wanted to send money immediately, loved the idea, said, I'll sign straight away, sent 250,000 stable coins across to my wallet in my phone within 5 seconds while on the call. It didn't go through a bank, so I didn't have to wait 5 days for it. And that was just the speed at which money can transfer. And with blockchain and DeFi, it sits on 3 pillars: smart contracts, which I'll talk to you about shortly, blockchain protocols. There are many types of blockchains, and it needs a bit of liquidity. Why is DeFi winning? There's no need to rely on central authority for this to carry on. We rely on private issuers. Anyone with an internet access can participate. The innovation around the blockchain space is forever evolving, and products and services forever emerging. There's yield opportunities here where you'll be able to profit from the use of blockchain, and it's transparent. All transactions are completely public. You can see exactly the transaction you and I are carry out. Now, what is blockchain? Blockchain is an interesting concept. It's a bit like an onion. So let's say in retail, let's say your store, if you have a shop, your shop is brick and mortar. Then the evolution of e-commerce came about, or Web 2. E-commerce was a kind of revolution in the front end where the interface would allow you to buy, sell, you'd be able to do social media. So that was kind of the movement of Web 2. So e-commerce. Layering on top of e-commerce is Web 3, or part of Web 3 is decentralized finance. So it's actually a layer on top of Web 3. So when I was talking about my decentralized multi-chain payment infrastructure solution for stablecoins, it's actually a layer over e-commerce, because I create an app that sits on blockchain that plugs into my Web 2 e-commerce that allows merchants to accept crypto payments. Blockchain, let's have some blockchain basics. In another way of explaining it, it's one big digital ledger that holds all records of transactions between you and me. And smart contracts are they're best described as computer programs that sit on blockchain, and they hold various parameters of the data that you're using. And tokens being minted, excuse me, are examples of data that's being encoded. Now, there's a note to me about how to explain blockchain in another way. Let's say you and I take a selfie. You take a selfie and I say, oh, send the selfie over to me. So what you do, you send it to me. Now, what's happened is that on your phone, you actually hold the selfie, the image, and the image is actually a copy of the image is sent to me. I now have a copy of the image. I haven't received the original image. I have received a copy. Let's say there's an original contract that you want to email to someone, and they say, send me the original contract. You email the contract. What's happening, the email system actually makes a copy and it sends it over. Somehow in our world, we've hoodwinked ourselves to believe original and authentic digital assets are unique. They're not, they're copies, and that's Web 2. What's happened with blockchain, it allows for the first time ever in history that when you send that selfie to me, it leaves your phone and comes to me. I now own that technology. I now own that code. And so it becomes a digital asset. And hence, when you're using blockchain to create digital assets, and if it's in limited supply, you now can create a currency. Now, when you create a code or a token, so we call this minting tokens. Blockchain has its own language, but it's minting tokens simply means creating a code. It comes in two flavors. One is a non-fungible token, and the second is a fungible token. And I've compared it to Star Wars characters, Yoda and Stormtroopers. A non-fungible token is a code that's created and it's completely unique, completely independent of itself. It's non-divisible, it's non-interchangeable, and it's tamper-proof. Now, NFTs can represent identities, certificates, licenses, keys to your car, tickets, copyrights, software licenses. You get the idea. Things that are that hold identity, that hold value, can be an NFT, right? And you can now send that NFT to me. It'll leave your device and come to me, right? And I'll hold that. Great. Another you can also, right, so going on to fungible tokens, a fungible token is actually something that can be replicated, and hence it allows you, these are codes that can be replicated within a certain supply, and this gives rise to cryptocurrencies or point systems. Now you would create these tokens on distributed ledger technologies or blockchain protocols, and there are private companies that have built their own blockchain system. Examples are like Ethereum, Bitcoin, Solana, Polkadot, Algorand, Conflux. And these are examples of blockchain protocols around the world that allow you to mint your own token. Now, moving on, I wanted to introduce you to the concept of stablecoins. Stablecoins are a very different beast in that it is, you can create, now you all heard of crypto, and the comparison with crypto and stablecoins, some compare stablecoins as part of crypto. I think it's completely different myself. And something like Bitcoin is extremely volatile, a bit like the Hulk. The value of it goes up and down, makes it a very exciting and exquisite investment piece, and it's a decentralized currency. Stablecoins are different in that they are pegged against a real world fiat currency. So you would peg a stablecoin against USD and becomes something like USDC issued by a company in America called Circle. EuroC, which is pegged on the euro, which is also offered by Circle. And then there's the pound token where I'm from, and actually the Bank of England is developing its own central bank digital currency called Bitcoin. And these are examples of stablecoin or using stablecoin infrastructure. They are more reliable because they hold value. And because they hold value. $1 is one USDC is equivalent to $1. And right now there's about $169 billion worth of coins in circulation. And you can use stable coins for international trade remittances, and I'm a big fan of them actually. for you to be able to swap out, turn your crypto or stable coins into back to dollars or pounds or euros, you use DEX or decentralized exchanges. Examples are like Binance, SushiSwap, Uniswap, and you actually have a company here in Mauritius called Mindex. Mindex, led by Jessica Naga, it has the license from the FSC to be able to provide exchange of your crypto into fiat. It also allows you to hold, they will hold your digital assets custody. So let's say you have a piece of land and you want to tokenize it and you want to be able to people to enjoy that, then Mindex will be able to tokenize it for you and hold that in custody for you to share with your customers or your community. So the future of money for me, in my view, is digital. And if we compare cash with digital money, it can take up to 5 seconds to send a stable coin or digital money. It's a non-bank transaction. You don't need a bank to facilitate this. It relies on private issuers. It moves at the speed of internet. So it's instantaneous. There's no cost, sometimes there's low cost or sometimes no cost in being able to use it. And I believe that the world will use stablecoins more when CBDCs or central bank digital currencies come into play. We're about a couple of years away when almost 100 central banks around the world will launch their own central bank digital currency. Now, that's not the central bank digital currencies or CBDCs are sovereign digital money. However, they're not necessarily decentralized. They are kind of pseudo decentralized. They're more centralized. So they are a beast unto their own. But the infrastructure is very similar. So you will find that when Mauritius launches its own digital rupee, you'll find that more people start to use it. You might be forced to use it if you're like, oh, you will only get your pension if it's in CBDC. You'll only get benefits if it's in CBDC, and suddenly you'll have to use it. So you'll have to adopt decentralized apps to be able to receive your money and convert it back or not. So I do feel that in 2 years, there will be a sudden increase in interest in stablecoins and crypto movement. Now, moving on to tokenization, what does that mean? As we said, you can take an NFT, for example, and you can turn it from non-fungible to fungible by splitting the NFT into thousands of pieces. So say I own a piece of art and I tokenize the art. When I say tokenize the art, you can tokenize the ownership of the art, for example. The certificate that says it's authentic, you can tokenize that. And that would represent the fact that I own the art by virtue of this NFT. This could split into 1,000 units and sell them to people so that everyone jointly owns the Mona Lisa, an example here, right? And what that does, that democratizes ownership of something so valuable. So real world assets can now be owned by many people. You might be able to, for hotels, they might be able to tokenize their room. And tokenizing a room, if people are renting that room or booking that room, the yield that you earn from the rental can be fractionalized. So everyone who co-owns that room can also benefit from the yield of renting that room. And that's the power of fractionalization. And it happens automatically, which I love so much, and how blockchain can really realize that. Now, where are we in the scheme of things? In any technology that's being launched, there's the diffusion of innovation of technology. It's a theory that shows how technology is being adopted. So at the moment, if you start right at the beginning, I'm kind of crypto native, I love the stuff, and I live and die for blockchain. But you get those people who are crypto adopters, those people that own cryptocurrency currently and trading on it, that they are crypto adopters. Then you've got this chasm. Now, this chasm is that jump from the early adopters into the majority, that tipping point of adoption. And that's the skill for any entrepreneur, is to get into that point where everyone's using it. And those who are crypto curious suddenly start using it in their everyday life. And when you hit that point where everyone's into it, fantastic. And then you get the late majority of those people that join in at a later date. But by then you've got 5% of the population using it. more. And the laggards are people who are denying, no, crypto is bad, it's evil, and I'm never going to use it. So this gives you kind of idea of the rate of adoption. But recently, and I took some screenshots of what's happened very recently, of different places around the world that are adopting blockchain. MasterCard launching its crypto debit card, some of the big banks adopting stablecoins for cross-border payments, and tokenized real estate market is booming actually. People are finding that more and more people are investing in property or in gold, or because the ability to tokenize it. So this comes to the end of my talk. I'm hoping we understood the sentence I started off with. So if I say it again, let's see if we understand it. So DodoPay is a decentralized multi-chain e-commerce payment plugin. Just to explain that again. So decentralized means it's on the blockchain. Multi-chain meaning that it actually is something we built on various, it's built on various blockchain protocols, not just one. And it's a plugin accepting crypto and stablecoins. I hope you've understood what the difference is between crypto and stablecoins, and rewards tokenized points for green purchases. The idea here is that if you make a sustainable purchase, you'd get points, and you always get points when if you're using petrol, or you're buying you're going to a hotel and you're getting various points, but they're tokenized points, meaning that they're on the blockchain also. And merchants use a digital wallet to be able to hold their the crypto that they receive from the customer, and they off-ramp into fiat. Now, what that means is that I can now exchange it into cash. So exchanging crypto into cash, it's a nice word called off-ramping. So I will stop there, and I hope I've been able to give you an insight in the Billy basics of decentralized finance. Thank you very much for having me. I'm Afzal, and I'm done speaking.
Thank you, Afzal. I actually have a few questions for you, so maybe if we can get onto that. So I would like to call the participants in the virtual room as well to drop your questions in the Q&A. You can do so anonymously, or you can raise your virtual hand, and we can allow you to talk as well on the interface. So based on what you presented here, Afzal, two questions came to my mind. And I've got a double barrel one to start with.
Okay.
From a technical or cultural perspective, how truly ready would you say is the world for a shift towards decentralizing finance?
Yeah, is it ready? The technology exists, the infrastructure exists, and so it is actually a mental shift more than it is anything else. The world is ready for it, I believe, and obviously, but I think the tipping point will be when the banks do it. So when the banks actually launch their central bank digital currencies, and they're all sovereign digital currencies, and everyone's using it, then I think people would understand. The problem with blockchain at the moment is the culture of blockchain or Web3. As blockchain enthusiasts, we love talking about the technology before the utility. And so we complicate our own world. And so blockchain in the future will be invisible. You will not know it exists. And at that point, then the adoption would happen faster. So let's say I give you an example of cloud computing. Dropbox is an example of you can store things online. It doesn't go on and on about cloud computing and the intricacies and complexities of cloud computing. Unfortunately, blockchain, when you're creating a decentralized app, we love to overtalk blockchain. Blockchain comes with its culture. When blockchain is invisible, you don't know it exists, and you're moving money across in 5 seconds. That's when I think the adoption has happened, and I do believe the banks would lead the way with CBDC. So that's where I think. And in terms of Mauritius has thanks to the FSC, they've actually created a very impressive crypto framework that allows you to actually get a license to be able to create your own decentralized app or create your own crypto startup. You can and so you actually in Mauritius you're actually ready to actually have a whole ecosystem of Web3 or blockchain startups, which can be quite exciting. So I think you're more ready than you think.
That is a very deep answer. Thank you for that. My second question, and again, I would like to welcome our participants here to drop in your questions if anything's coming to mind. Um, in a larger context here, so what type of DeFi applications would you say could benefit Africa, the continent, the most over the foreseeable future? So you're going to go through a few of the applications more in, let's say, a business perspective, but from a community development or a continent at large, what could be the benefit?
The benefit I'm seeing right now, so in terms of it right now, is being able is to real world tokenization.
Mm,
Africa has lots of land, has lots of commodities, has a lot to give. People want a piece of it. Being able to tokenize real world assets will allow people to start buying into and investing in Africa because you've lowered the entry barrier. So if something was worth $3,000, suddenly it's $30. People can access it. People can participate in investing. More and more people can now invest, no matter how much money they have, or and whatever they are in the economic strata. An example would be like Mindex. Mindex has a wonderful way of, it has its own decentralized exchange license where you're able to create real world assets on their exchange. However, they also offer a sub-license. So if you're an aggregator of projects and let's say energy projects or farming agriculture projects, you can actually create your own sub-exchange and be able to create your own mini offshoot of a decentralized exchange, so that more and more projects within a certain verticals can benefit. So that technology and licensing actually exists in Mauritius. So if anyone's interested in that space, that the opportunity is actually there.
Well, we might quote you on this and maybe reshare it on our social media. Thank you for that input and those insights. I don't see any questions coming in for now, maybe for later. So for now, I will thank you and now hand over to Lawrence that I will now call into the virtual floor. Thank you, Asal. So Lawrence, if you can, okay, I can see you now.
Yes,
Happy to have
I
you
am
back
here.
on the virtual floor. Well, Lawrence, once
Thank
again,
you.
thank you for accepting our invitation for joining this session. So for our attendees here, just to provide you a little brief, so we're going to head into the exploration of how one could get started in DeFi, and most importantly, look into the legal considerations into this space. So over to you, Lawrence. I'll see you in a few.
Thank you so much. It's my pleasure to be here. I'm very honored to be here. I'm representing Asosiasi Blockchain Indonesia, basically the Indonesian blockchain associations that oversees all Indonesian-based companies who are innovating in the blockchain, Web3, and crypto space. So I'm representing Asosiasi Blockchain Indonesia, but I myself is also the CEO and co-founder of Nobi. We're an Indonesian company focusing on crypto asset management brokerage. We do also run staking validator brokerage service and blockchain innovations. So we do a lot of things, and we also work together with the association and talk to the regulator, helping them navigating the space. So because this is a very new space, and I think this is not only specific to Indonesia, but also to everyone around the world. So let me start the slide by introducing about how DeFi ecosystem in Asian and especially also in Indonesia, because it has technology impact, and the Indonesia have its own role in the regulatory landscape across ASEAN. So next slide, please. Let's start with the milestone of our associations. So we try to align with the regulatory growth as it grows year to year, and it goes progressively with how the regulator understand crypto and how like different use case and different companies starts to show up in our ecosystem. We started back in 2017, so it's been a while, and we keep growing in terms of size and in terms of things that we help. Okay, on the next slide, the Indonesia Web3 landscape right now represents an evolving digital ecosystem. It's characterized by the integration of decentralized technologies such as blockchain, crypto assets, and smart contracts. We've also seen synergy between traditional financial institutions and FinTech entities, which is driving significant reforms, enhancing the accessibility and security of digital financial service. Additionally, regulatory developments are supporting the growth of blockchain applications, from asset tokenization, digital identity solutions, and this basically position Indonesia as a pivotal player in the Southeast Asian digital economy. We see government agency as policymakers and technology users. We have exchange and over-the-counter OTC platforms for crypto asset trading. We also see infrastructure and protocol provider, blockchain consulting firms and services, investment tools and support services, social platforms and transaction monitoring institutions, media, education platforms, and emerging sectors like NFT and Web3 gaming are also becoming big in Indonesia. And last but not least, of course, capital providers, starting from conventional banks and venture capital arms, which basically funded some companies. Next slide. As one of the emerging sectors, blockchain use case in financial service have gained momentum across ASEAN, as governments recognize the technology potential to enhance efficiency and transparency. In this context, several use cases such as trade finance, cross-border payment solutions, smart contracts, and recurring payments, and even credit scoring might be a good example to show how blockchain significantly changed the current financial system. So next slide, we started from trade finance. This image contrasts traditional trade finance, TradFi, with blockchain-based trade finance, highlighting inefficiencies in the traditional system where multiple copies of documents can lead to manual errors and comprehensive documentation mistakes. In the blockchain system, the distributed ledger allows us minimizing manual errors and streamlining the process by recording payment details and bills directly on the network. This improves accuracy and efficiency across financial transactions. Next slide, we talk about real-time and cross-border payment solution. So this slide explains the impact of blockchain technology. Since 2017, on real-time and cross-border payment solutions, there are the rise of platforms like Ripple and Ethereum. It highlights advantage such as faster transaction speed, disintermediations, removal of third-party barriers through automations, increasing automation and enhanced security. This is an example of how Ripple facilitates efficient, secure cross-border transactions by simplifying traditional payment systems and reducing intermediaries. On the next slides, we talk about smart contracts and recurring payments. In B2B transactions, payments typically can take 3-4 days to complete due to involvement of intermediaries, third parties in the process. They rely on documents that are sent manually that may delay the sales cycle. Smart contracts can streamline this process by providing transparent agreement, ensuring that recurring payments every month or year are processed automatically and smoothly, and determining the execution of issue resolution actions according to the party wishes, written down in the smart contract. It does give in full control to both buyer and seller without having intermediary. On the next slide, we also have credit scoring. This is last but not least, but this highlights the potential for blockchain to revolutionize the credit score system by resolving the issue of a score immobility across institutions. This is something that happens on many countries. With blockchain, credit scores become much more dynamic and accessible, allowing lenders to instantly verify financial history through immutable records. This is not only about transparency, but also ensures that personal data is securely managed through smart contracts, giving individuals greater control over their credit information and enabling the use of their credit scores across multiple banks and financial platforms. Okay, now next slide. This is what people usually talk about, right? How blockchain can make finance evolve. Let us deep dive into the changing process of finance system that we have today. On the next slide, we are starting to see super apps, non-bank applications that are entering the market with financial services, operating in parallel with increasing transactions and with less authority than traditional banks. We witnessed a shift in value from traditional models where users are more interested in tangible benefits offered. This will drive the current business model to evolve into value-oriented models as we use these super apps for their perceived benefits and are more willing to deposit money, something that was less common 10 years ago. And we are entering the era of DeFi, which is already happening in the blockchain space. As explained previously, essentially users can trade, transact, and move assets anytime they want without any third-party intermediary. Here, it is also important to consider the role of CDBC, the central bank digital currencies, in maintaining the existence of bank as we move into the DeFi era. As of the latest report, major banks continue to increase their investment in blockchain and crypto-related companies. Over 40 top public companies, including key players like BlackRock, Alphabet, Morgan Stanley, have put billions into blockchain and crypto technologies. Morgan Stanley have invested about 1.1 billion and NYDIG. Other banks are also equally active. We see BNY Mellon has invested approximately 690 million on crypto custody service. Goldman Sachs has also done something to do with that with Coinmetrics. Those are like blockchain data service. Citibank also active with over 279 million invested in blockchain related ventures. Many banks, including Commonwealth, Bank of Australia, and United Overseas Banks, they are actively supporting blockchain and crypto innovations, helping drive the sector's growth across global financial markets. DeFi, so we can go to the next slide. DeFi refers to a set of financial services and applications built on blockchain technology that operate without traditional intermediaries like bank, right? You can go to the next slide. This system aims to provide more open, transparent, and accessible financial service by removing the need of central authorities and allowing users to maintain control over their own assets. Next slide. A significant difference between traditional finance and centralized finance, CeFi, is that traditional finance involves only traditional financial institutions like banks, while CeFi involves digital platforms and technologies. In Indonesia, we have companies like GoPay, OVO, digital wallets companies, and many conventional banks are now still transitioning towards CeFi. Now, we have DeFi, and DeFi refers to financial applications that rely on blockchain for security and integrity. DeFi users retain control over their tokens. That means they will hold their private keys to their wallet. There's also this keyword, DAO, which is a decentralized autonomous organizations. It's basically how these autonomous organizations are managed by using decentralized methods. So it's different to the regular organizations that operates with the traditional hierarchical structures. In a DAO, decisions are made by community members who usually own tokens, governance tokens, or through other blockchain-based mechanisms. Next slide. A deeper look into differences between TradFi, traditional finance, and decentralized finance from various aspects. Generally, DeFi offers a higher efficiency, but also risks related to transparency and access. It operates in a Next slide. DeFi has also several benefits compared to the traditional finance. It's decentralized, it's borderless, it's transparent, and it also supports different financial innovation. However, it's important to remember that DeFi also has risks that need to be considered. There are security risks, there are also smart contract risks and market risks related to the volatility of crypto assets. These factors should be considered when evaluating the opportunities and risks of DeFi. Right. Next, now we come to the core materials of today's webinar, the regulation part. Generally, DeFi in Indonesia and Asia are still progressing. Each country in ASEAN is still exploring the best practice and regulations to be applied. But first, let's take a look at Indonesia. Next slide. Indonesia regulatory landscape for crypto assets and DeFi is still evolving. We have several key authorities and regulations that shape the market. On the left, we have Commodity Futures Trading Regulatory Agency, called BAPEPTI, who are overseeing the trading of crypto assets, including DeFi-related activities. It ensures that crypto is treated as a commodity and that DeFi tokens can be legally traded, provided they meet strict guidelines such as asset listing criteria, minimum capital requirement, and robust customer protection measure. There's also Bank Indonesia, our central bank, and the Financial Service Authority, OJK, Otoritas Jasa Keuangan, which is our FSA. It regulates broader financial service and digital financial innovation. The Digital Financial Innovation Sandbox, established by OJK, allows DeFi projects to be tested in a controlled environment before a more formal market regulation framework is implemented, expected next year by 2025. DeFi platform must also adhere to the anti-money laundering and counter-terrorism financing AML/CTF regulation, ensuring that they monitor and reporting any suspicious transaction. However, there remain challenges, such as the absence of a defined framework, especially for DeFi, leading to uncertainty around governance token and decentralized exchange. Additionally, while Indonesia strives to balance its role as a FinTech hub, it faces ongoing debates on how should we regulate DeFi without hindering technological innovation. Next slide. In a broader way, several countries in ASEAN have also been progressively developing the DeFi standard and regulation. In Vietnam, the State Bank of Vietnam serves as the primary regulatory authority. They oversee financial institutions and digital financial service. Despite the oversight, the country has imposed strict regulations regarding the use of cryptocurrency. Specifically, crypto, including DeFi token, is prohibited as a means of payment. Although holding and trading this digital asset is not explicitly banned. Vietnam is also in the process of developing its legal framework for digital assets, which could potentially cover DeFi activity. However, it's still waiting for a comprehensive regulatory framework that leaves the status of many DeFi projects uncertain. In Singapore, the Monetary Authority of Singapore, MAS, takes charge of regulating DeFi, cryptocurrency, and other blockchain-based financial service. Key regulations include the Payment Service Act, PSA, which governs crypto exchange and payment service provider. Including in those is DeFi transaction. Additionally, the Financial Service and Market Bills of 2022 broadens MAS regulatory scope to include digital token service that potentially affect DeFi activities such as lending, borrowing, and staking. Singapore is also pushing the boundaries of a regulated DeFi with Project Guardian. It's a pilot project in exploring asset tokenization and permission DeFi protocol. A critical challenge for AMS is maintaining a balance between innovations and ensuring financial stability and consumer protection. Malaysia regulatory landscape is managed by two authorities. There's the Security Commission Malaysia, SC, which regulates digital asset offering and trading platform. We also have Bank Negara Malaysia, its central bank, overseeing the broader financial system, smart contract guidelines on digital assets, outline regulations for digital token issuance and the operation of digital asset exchange. Additionally, Malaysia's unique dual finance system requires that DeFi projects adhere to Sharia law, impacting their design and operation. A key challenge remains the lack of specific DeFi regulation, leaving the industry still have to navigate its place within existing digital asset law. In Thailand, the regulation of digital assets, including DeFi platform, falls under the Security and Exchange Commission, SEC, and the Bank of Thailand, which oversees the broader financial sector. The Digital Asset Act governs the issuance and trading of digital tokens, potentially encompass DeFi activities. Thailand has made significant strides in regulating digital assets. However, there remains a greater need for regulatory clarity concerning DeFi governance tokens and yield farming. Lastly, in the Philippines, the Bangko Sentral Pilipinas, BSP, and the Securities and Exchange Commission, SEC, share responsibilities in regulating financial institutions and digital assets. DeFi platform operating in the country must register as VASP, the Virtual Asset Service Provider, with the BSP. Moreover, SEC crowdfunding rules may apply to DeFi projects, including token offering or digital asset investment. The Philippines faces challenge of balancing innovations with regulation as it continues to cultivate its reputation as a FinTech hub, while exploring how best to regulate DeFi without stifling its growth. Okay, next slide, DeFi potential for financial inclusion. DeFi presents a unique opportunity to drive financial inclusion by providing access to financial service for underserved and unbanked populations. By leveraging decentralized platforms, individuals can participate in a global finance system without relying on the traditional intermediaries, offering a more accessible, transparent, and affordable solutions. Next slide. The potential of DeFi is significant. As you can see here, by 2024, the DeFi market is expected to reach 26.15 billion, with further growth to 36.02 billion by 2027. Notably, Indonesia ranks 5th globally in DeFi adoption by value and 7th overall in 2023, showing the country's rapid engagement with DeFi service. As DeFi continues to evolve, its potential to disrupt traditional finance and enhance financial inclusion worldwide becomes more apparent. Next slide. Indonesia DeFi potential is vast, supported by several key factors. With around 200 million internet users in 2024, the country's digital economy is expected to soar, reaching $130 billion by 2025. Additionally, crypto adoption is on the rise, with 24 million users as of June 2024. This rapid adoption is bolstered by comprehensive regulations for blockchain and crypto assets, ensuring a clear legal framework for innovation. The country also has a robust financial infrastructure with 100 FinTech companies and vibrant, growing blocks contribute to Indonesia's strong positions to leverage DeFi for financial inclusion. With such large internet connection population, DeFi can provide access to financial service for the underserved, particularly in remote areas where the traditional bank is less accessible. By removing the intermediaries and offering a decentralized solution, DeFi has the potential to democratize access to loans, investment, and saving, empowering millions of Indonesians who are currently unbanked or underbanked. Now, how will the DeFi evolve during the last 3 months of 2024 and possibly earlier next year? Next slide. This year, DeFi is set to make significant strides across various sectors, with several key developments shaping its futures. Crypto bridges will enable investors to move assets faster between networks, such as Polygon, Arbitrum, Solana, while simplifying token exchange across multiple platforms, creating more fluid and efficient transactions. There's also integration of traditional finance with DeFi is another major trend as digital banking continues to grow. In Southeast Asia alone, digital financial services are projected to reach 130 billion by 2025 and USD 2 trillion by 2030, highlighting the importance of synergy between traditional and decentralized systems. Don't forget, blockchain gaming is also expected to become a booming industry. As per Fortune Business Insights, the value of blockchain gaming sector could reach 614 billion by 2031, with nations like Philippines, Vietnam, and Malaysia poised to play key roles in its growth across Southeast Asia. There's also decentralized exchange, automated market maker, which offer users more autonomy, security, and control. CDBC are also advancing rapidly, such as in Bahama, Nigeria, and Jamaica. Another 36 countries have pilots underway, reflecting the growing interest in CDBC's potential. As DeFi evolves across this area, it holds immense promise for reshaping global finance by offering more decentralized, accessible, and efficient alternative to the traditional system. So as we conclude this webinar on DeFi in Indonesia and across Asia, it's clear that the region stands at the forefront of an exciting digital revolution. There's a rapid adoption of blockchain technology coupled with the region's growing digital economy. It presents unparalleled opportunities for financial innovation, inclusion, and economic growth. Indonesia, with its large FinTech ecosystem and strong crypto adoption, is poised to play a leading role in shaping the future of decentralized finance, not just within its borders, but across Southeast Asia. But the potential of DeFi is immense. The full potential of DeFi will require a concerted effort from all stakeholders, from government, regulators, business, and community. By fostering collaboration, ASEAN can unlock the transformative power of DeFi while safeguarding financial stability and protecting consumers. Together, we can write a new chapter in ASEAN history. One is driven by innovation, inclusivity, and shared prosperity for all. This ends the slide for me. I'm Lawrence. Thank you very much for joining this.
Thank you, Lawrence, for these insights. Calling on to our audience here, if you have any questions that you would like to ask to Lawrence or Afzal, who I will call onto the virtual panel as well as we head into some Q&A that I have prepared for you. So maybe the first few ones that I have here, Lawrence, based on what you've presented, one main concept that often comes up around the topic of decentralization is the displacement of jobs. What are your views on this, and what would you say are some ways to mitigate it?
Sorry, can you repeat again the question?
Sure. One main concern that has been reported by many stakeholders around the concept and the topic of decentralization is the displacement of jobs, right? Which could further exclude people from the system. What are your views on this, and what would you say are some ways to mitigate this?
Correct. Yes. So I think if we talk about displacement of jobs and the fact that this is a very new technology, blockchain and crypto has only been around for 15 years since Bitcoin emerged, and we only see rapid adoption maybe in the last 10 years probably. So I think the opportunity itself is huge, right? So let's not concern on the displacement of jobs, rather like the potentials, because there's on every innovation, it opens up a big opportunity, and especially like what we see here in Indonesia, we see that there's a growing community that are all interested on having new jobs in Web3. Right? Some say that this is informal sector, but I think I disagree with that terms. I think that's not informal sector. It's future sector. Because I think a lot of people are simply are working on a bleeding edge. They work on Web3 projects. They work on DeFi. They are basically the front run of this new ecosystem. So I think I don't think we should be worrying. We should be worrying that we can get left behind if we don't really start looking at this opportunity.
It's very similar to the cycle we've seen with Web2, really, with the arrival of whole new digital jobs at the time 15, 20 years ago. So I think that does provide some insight on this question. Another question from me, you mentioned earlier frameworks for DeFi are still undefined. Indonesia being also emerging, same as Mauritius, also an emerging hub in FinTech. On this topic, would you say that a definite singular organization should come up with a model that could drive DeFi globally and a framework, or what would be the way to go if we were to set standards and frameworks that could benefit in ecosystems at large?
Right. I think there should be like a global guideline on how all countries, all regulators should be regulating this. In the end, every country have its own agenda. It has its own flavor, its own risk profile, right? So that's how I see that. Like even in ASEAN, we have countries like Singapore, which probably have like the most advanced regulatory framework. But we also have like Thailand, Indonesia, which also has its own concern. So I think if there's like a broad guideline on how we should all regulating this, but at the same time, let's not forget that the reason of this decentralized finance, becoming very popular is because it offers innovations. It offers things that we never see in a finance or in a Web2 technologies. So let's make sure that the guidelines of the regulations doesn't hinder the innovations, because otherwise then it becoming a technology that it becomes a technology that nobody wants to use because it becoming a centralized, right? So I think in the end what we need is just like a guideline, and each country should have its own ways of regulating it.
So basically, you're calling for we would have a Google Doc that every country could type into and share guidelines. Your thoughts on that, maybe, Akbal, if you want to add on anything on this question? You're on mute.
Yeah, could you repeat that question again so I get it right?
So the question was around defining DeFi, right? So right now we do not have any defined framework or guidelines for its implementation. So the question was, should it be the responsibility of one singular overarching organization to set standards in this space that could potentially guide countries in implementation, or what would be your thoughts on that? Just an open question.
Yeah, my answer to that would be no, only because if you allow, I think there is in the world we live in today, different countries are catering to their different needs when it comes to any technology adoption. And you probably don't want the West dictating how you should, the people in the East should actually run DeFi. For the simple reason is that the DeFi also can threaten the dollar. So there is a big movement from the East of de-dollarization, which America doesn't like, to be honest. And so DeFi actually unlocks a lot of potentials for trade to happen without the dollar amongst countries quite effectively and efficiently. So no, you wouldn't want an overarching, because you would probably want something quite internal within regions. So maybe there's something that unifies all the states in Africa so that they have a common guideline so that they can trade easily. There's a big problem there. Maybe it's across Southeast Asia, so that they can work together in that sense. So those little kind of micro treaties amongst regions can be effective as guidelines. But an overall one, you wouldn't want the West telling you what to do.
Okay, thank you for that insight. And maybe on this, looping back onto another point you presented earlier. So it's clear that the DeFi ecosystem proposes the elimination of institutions as third parties, right? Like banking institutions or brokers for that matter. And we're seeing institutions like MasterCard now, which are FinTechs by definition, in their transition that are now adopting crypto as part of their processes as well. Would you say that what would be the way, let me rephrase that question, what would be the way for banking institutions or large financial institutions in apprehending this new world, and how could they navigate it in the face of this potential elimination?
Well, I could answer some of it. It's very difficult, I find, for banks to get on board with a decentralized system because banks are inherently decentralized. But they are, as I said previously, they are coming up with their own solutions. And so every year, all the central banks meet up to discuss central bank digital currencies. And they share between them the technologies and the know-how. They're taking their time to get it right. And they're very, very impressive policies and standards that are coming out around central bank digital currencies. So I do believe banks could lead the way in a form of cryptocurrency. It's not really crypto, but it uses the same infrastructure. So they will then, I think what most, because everyone's got a bank account, suddenly you're using central bank digital currencies, you'll suddenly know how to use the infrastructure. And that's when it'll shine a light on private issuers who are using stable coins or crypto for you to be able to adopt that. And I think that's what I predict the tipping point is when the banks roll out the same infrastructure. There's adoption there for everyone to sit up and go, oh, that's how you use crypto. Oh, that's how you use stable coins. So that's where I think that the space would be for banks.
Thank you for that. I'm certain if there are bankers in the virtual room, that could be insights that could support them with this new change. We did have one question that came in, which is not directly related to our discussion, but asking if we will have the recording. So yes, the recording for this webinar will be uploaded to our YouTube channel. So I invite everyone to subscribe to our platform or from our website. You will be able to get that very easily from there. Last call, I would say, for the audience who is with us to drop in your questions. If there's anything you would like to ask live to Lauren or Afzal here, who will be very happy to give you their input on the topics we're presenting today. I'm going to maybe close this on with one last question, open to you both. So for those who are curious in learning more about DeFi and its applications, what would you recommend they start with in terms of learning or researching bases? If someone's really just starting out, what would be some key resources or platforms you would like to recommend?
Lawrence,
So we're getting the...
All right. So I think the first thing that you will want to understand, if you want to understand about DeFi, I'm more a practical guy. So for me, I think the best way to understand DeFi is by experiencing it. So I think the first thing you need to do is try to have like a non-custodial wallet. Wallet that you
we lost you, Lawrence.
like the private key is actually in your possession. Yeah. The first thing that you need to do is basically you need a good non-custodial wallet, something like a MetaMask or Phantom, right? And I think by having that, and then you can try to explore like different DeFi apps, maybe like a game, or maybe if you're into finance, maybe you can try Borrow or Lending and like some popular protocols such as Aave, or maybe you can use Jupiter in Solana. Like there are different things that I think are very popular nowadays. You just need to try to use it and see and experience the magic, right? People sometimes see DeFi as a very complicated alien technology, but once you're experiencing it, it's not any different to like the apps that you usually use on your phone. It's just that when you realize that we can do this without any third-party intermediary, and how this can all happens in real time, that's when you realize that this technology will go farther than what most people imagine. Then that's from my end. Afzal, maybe you have
Thank you for
different
that.
opinion
So
on this.
practice
Yeah.
and not just dwelling on theory. Got you.
Yeah, no, that was very
Yes.
good, Lawrence. That was a really good tip actually for people to get on board. To follow on what Lawrence is saying, how I learned DeFi was exactly what Lawrence says. You've got to try it, and if you subscribe to various kind of blockchain news, you understand the players in the space, like the different protocols like Solana, Algorand, Conflux, Ethereum. They're all companies and they're all doing something, they're all inventing. I would bombard yourself with articles about them, articles and knowledge about them, and read it every day, even if you don't understand it. Keep reading like DeFi, and you won't understand it until it clicks, and you'll start to see through the matrix. But it is subjecting yourself to the language so that you understand it, and then when you start understanding the nuances around this area, because you're reading different articles and the different movements of technology, that's how you'd move forward. Be careful, I think, to look at something that's, kind of don't do a course on it, because the course will be a snapshot of what DeFi looked like 2 years ago, but it's moving so fast that there's no course that can update you on what it is. And as Lawrence says, if you're in it and you're experiencing it, it's so nascent, the area, that you've got to just ride the wave rather than expect there's a course to get a certificate on learning DeFi. It's redundant.
Oh, that's very interesting. My takeaway from this is read until you see into the matrix, is what I'm retaining from your intervention here. So thank you for that. We do not have more questions that have come in, so I think on this note, I will close off the webinar for today. Thank you again, Afzal and Lawrence, for joining us. I thought that was very insightful. I've also learned a lot from you two here. I invite members of the audience to connect with you both and follow you on LinkedIn as well, and to reach out to you directly. We will be uploading this recording to our YouTube channel. And so, yeah, let's stay in touch, and I'll see you in the next one. Goodbye, everyone.